Alright guys, it's time to talk about Broadcom. What do they actually do and if there is still any opportunity here? They have two components. One is hardware in which they design custom AI chips. They have Ethernet switches. These help in moving data within and across data centers. They also deliver specialized chips for smartphones in connectivity, navigation and power management. Then we have the software component. Here they offer mainframe solutions, cloud management, security services for endpoint protection and information loss prevention. This is high margin and recurring revenue business. But in this video, we'll focus on AI revenue which comes from custom ASICs. Broadcom had great earnings. There is nothing much to talk about here. AI chip revenue was 10.8 billion which was up 143% year over year. But the main issue was forward guidance. Next quarter AI guidance came in at 16 billion versus expected 17.2 billion. Hock Tan, CEO of Broadcom, refused to raise the financial year 2027 AI guidance and reiterated the north of 100 billion remark. That was a disappointment for investors and the stock was already priced for perfection by that time. So we saw a pullback after the earnings. Now why did the people were expecting more from Broadcom? Anthropic and Google has increased their TPU orders by a gigawatt. So people were expecting that money to show up in Broadcom forward guidance. Now the real thing that discouraged the investors was exclusivity of Broadcom for Google TPU has ended. Google split its next generation TPU version 8 into two chips. TPU 8T Sunfish, the high performance training chip, Broadcom will keep this. The other one is TPU 8i Zebrafish, the cheaper inference chip. MediaTek got this. This showed MediaTek could be eating Broadcom's lunch. By doing this, Google can reduce per chip cost by 30%. This is excellent for Google. They will keep the training chip on Broadcom as that is the hardest chip to make and Broadcom's expertise in networking will be useful and they are okay to pay the premium for this. Once model is deployed, inference need far more compute than training. So cost competitiveness matters more here. So MediaTek fits perfectly here. This is indeed a way to pressure Broadcom on the margins as well. That being said, Broadcom has a contract with Google that will run through 2031 and Google is not the only customer for Broadcom. Of course, they are the one who are actually paying right now. Going forward, hyperscalers will look to develop their own custom chips to avoid huge margins of Nvidia. Meta, Microsoft, OpenAI and Anthropic are actively working with Broadcom right now. Assuming there is some kind of sandbagging from the CEO and if the multiples hold up, there is still upside that I see for this stock. Again guys, this is not financial advice and please do your own research before making any decision.